Hi, this is Claudia again. Welcome back to my YouTube channel. So today we're talking about fundamental analysis and how to analyze the stock, so stay tuned. So fundamental analysis, it includes balance sheets, income statements, and cash flow statements. So the balance sheet is usually what the company current assets, liabilities, and equity. Assets are things that a company owns: cash, equipment, property, stuff like that. Liability is, of course, debt. It's whatever outstanding debt, what has to be paid. Liabilities and assets usually offset each other. So let's say a company takes out a loan to buy a property. The loan would be the liability, while the property would be the asset. Capital or equity is the amount of assets being raised by issuing stock. So when a company goes IPO, initial public offering, goes on the public stock market, the capital is used to fund expenses. And the balance is achieved when the value of the assets are equal with the liability and owner's equity. So it balances it out. The balance sheet shows you how the company raises money for its asset and can help determine if the company is overextended. And if you want to know how the company earns money, you will have to look at the income statements. Now, the income statement reveal revenue and expenses. When you take revenue and subtract expenses, you get net income. And the net income is the earnings of a company. Earnings are either shared through dividends or reinvested into the company. Reinvesting earnings can help a company with its cash position. And that, of course, will help with the company's ups and downs in the economy like we have right now. The more cash they have, the safer they are. And that's when you hear investors say cash is king. That's what they mean with it. It doesn't mean that you should hoard your cash under the mattress. It just means that a company should have some cash set aside to deal with all these crazy, volatile markets right now. And of course, some investors will use ratios. Price to earnings ratio, debt to equity ratio, return on equity, current ratio, and net profit margin. The most common is probably the PE ratio. So to get the PE ratio or the price to earnings ratio, you need to divide the net income with the number of outstanding shares. And then this number is called the earnings per share, EPS. Next, divide the price of the stock with the EPS to get the PE ratio. Of course, there's much more that goes into evaluating stock, but you can always sign up with companies like TipRanks. So like I said, you can always sign up with companies like TipRanks, or I think Morningstar is another one. There's a lot of other ones out there. But what I like about them, they have several analysts analyzing a stock, and they have some that have a totally positive on a stock and they have a bull case. Then you have somebody who is a total negative on a stock, it's a bear case, and then you have the in between, and that's usually what they use. They use the average, which is kind of cool. So TipRanks is a good one. They all have monthly fees, and most of them actually have YouTube channels, so you can check them out on YouTube. I personally love TipRanks. I love to watch them every morning and pre-market, and then of course they always call out the best dividend stocks. And it's never investment advice, but it's nice to see how they evaluate everything. But so yeah, right now we're going a little bit through a down phase in our economy, a little bit of a recession. Too much spending, government spending, and inflation is still really high. It's kind of like, a fight between the federal feds and the government. Here, there's one is spending, which causes more inflation. The other one is trying to raise interest rates to slow all this down and get inflation down. But we'll see where it goes. OPEC just announced that they're slowing down the production of oil in October, so that might raise our gasoline prices again. But, eventually all of this is going to be over, and hopefully it'll be over sooner than we think. And then we can go about our lives. But right now, there's a lot of stocks on sale. And if you're too scared to invest right now, you can always buy an ETF, buy a couple of shares of an ETF, of a quality ETF, something that has the whole stock market, so you don't feel those drastic ups and downs, because we never know when we reach the bottom. So some say we already reached the bottom, others say we'll go further down in the market. So nobody has a crystal ball, so we don't know exactly when that happens. But the best way to do this is to, average in, slowly buy stocks, or your shares of whatever you want to buy, and then just go about and buy every week or a few weeks another few shares, because once this market goes back up, and it always does, the next bull market can make you a lot of money. So don't miss it, and don't be too scared, because the only time you lose money is when you sell. So remember. So this is Claudia, and I hope you like this channel, and give me a like, and I see you next week. Goodbye.